So my company is issuing bonds and issuing preferred stock that's backed by Bitcoin. And our mission is to create a new theory of credit, right? We want to issue billions, then tens of billions, then hundreds of billions, then trillions of dollars worth of credit instruments that are backed by real money. And that's what we're doing right now. We're the largest convertible bond issuer in the world last year. I would like to be the largest convertible bond issuer this year. And those convertible bonds are the highest performing, most sought after bonds in the world because they're backed by Bitcoin, by real money. Other people that issue convertible bonds don't have any money. They're actually just backed by future expectations of getting some money. And we just issued this convertible preferred stock called Strike, STRK. That's the first convertible preferred instrument ever backed by Bitcoin or any crypto asset. And that's the best performing one as well. And then we announced a $21 billion shelf registration. That's the first time anybody in the history of the capital markets has ever attached a shelf registration to a preferred stock. Okay, so what are we going to do? We're going to sell billions of dollars of preferred stock to a market, and it's going to be twice as good or 3 times as good as the existing preferred. So preferred stock investors get a benefit, and then we're going to buy Bitcoin, and our common stock shareholders are going to get a benefit, and the Bitcoin network is going to grow, and the entire crypto economy is going to grow. And so the long-term plan is just securitize the entire market. And last year we raised about $22 billion of capital. If we can raise 22 billion, then 40 billion, then 80 billion, then 160 billion, then 320 billion, we'll just keep raising more capital. And you would say, well, when is it going to end? Well, when we've got 1% of the fixed income market, that's going to be $3 trillion, Christine. And then it won't end, right? When we get 1%, we'll be going for 2%. And then we'll be going for 4%. So there's really no reason to ever end. And you're like, well, what is the value you're creating? And the answer is, we're giving all the fixed income investors an extra 200 basis points of yield every year with less risk, right? That's the value we're creating. We're basically rationalizing the equity capital markets and the fixed income capital markets. We're improving the credit quality and we're improving the returns because, like, for example, if you're holding $5 billion of Bitcoin and you issue $1 billion of credit instruments and the Bitcoin is trading with a vol of 60, there's like an 80 to 100 basis point risk that you'll be under collateralized in 12 months. That means that you ought to have investment grade credit, but the market's treating you like junk. So we can pay junk bond rates and offer investment grade credit, and someone gets an extra 400 basis points of boost, and we can afford it because our use of proceeds invest in a network that pays 30 to 60% a year, and then they benefit. And so what we're really doing is we're digitally transforming the capital markets to the benefit of everybody involved.